Question 9. What are the risks associated with FBOT ETF? Investing in FBOT ETF involves certain risks that potential investors should carefully consider before making a decision. Market volatility. The ETF's price can experience significant fluctuations based on broader market movements and the performance of its underlying companies. This volatility can be exacerbated by factors like economic recessions, interest rate changes, or unexpected industry disruptions, potentially leading to capital losses for investors. Technology dependence. The success of FBOT heavily relies on the continued development and adoption of automation technologies. If the expected growth in automation fails to materialize or encounters significant setbacks, the performance of the underlying companies and the ETF could be negatively impacted. Active management risk. The performance of FBOT depends on the decision-making capabilities of the portfolio managers. Their selection of companies and portfolio allocations may not always produce positive results, and the fund's performance may deviate significantly from its benchmark or the broader market. Sector concentration. FBOT's focus on automation-related companies exposes investors to greater risks associated with a specific sector compared to a more diversified portfolio. If the automation sector experiences a downturn, the ETF's performance could be disproportionately affected compared to a more diversified investment strategy. Emerging markets exposure. FBOT invests in companies globally, including those in emerging markets. These markets can be subject to higher volatility, political instability, and currency fluctuations, potentially leading to additional risks for investors compared to established markets. Liquidity risk. While traded on a major exchange, FBOT is a relatively young ETF. Its trading volume might be lower compared to established ETFs, potentially leading to liquidity risk. This means it might be more challenging to buy or sell shares at the desired price, especially during periods of high market volatility. Tax implications. As an ETF, FBOT generally distributes capital gains to shareholders annually. These distributions may be subject to taxation depending on individual circumstances. Investors should consult with their tax advisors to understand the potential tax implications of investing in FBOT. ESG considerations. While FBOT integrates ESG factors into its investment process, this does not guarantee that the underlying companies will always operate in a completely ethical or sustainable manner. Investors seeking a more rigorous ESG focus might need to consider other investment options. Fees and expenses. While the expense ratio of 0.5% is competitive compared to some actively managed funds, it's important to understand that fees and expenses can eat into potential returns over time. Investors should compare the expense ratio of FBOT to other investment options when making an informed decision. Question 10. How does FBOT ETF fit into an investment portfolio? The suitability of FBOT ETF within an investment portfolio depends on several factors, including your risk tolerance, investment goals, and overall portfolio allocation. Here's how FBOT might fit into different scenarios. Aggressive investors. Potential fit. Aggressive investors seeking high growth potential and comfortable with higher risk might consider a limited allocation to FBOT. The potential for significant capital appreciation from disruptive automation companies aligns with their aggressive stance, but the risks of market volatility and technology dependence need careful consideration. Moderate investors. Potential fit. Moderate investors prioritizing growth with some risk management might allocate a smaller portion of their portfolio to FBOT. The diversification benefits and potential for long-term growth can be attractive, but careful monitoring and portfolio rebalancing are crucial to manage the inherent risks. Conservative investors. Potential non-fit. FBOT might not be suitable for conservative investors seeking capital preservation and minimizing risk. The inherent volatility and sector concentration of FBOT expose them to risks exceeding their risk tolerance. Considerations for all investors. Overall portfolio allocation. Regardless of risk tolerance, FBOT should represent a limited portion of your overall portfolio to mitigate the risks associated with a single sector or actively managed strategy. Investment horizon. FBOT is intended for investors with a long-term investment horizon, 5 to 10 years or more, to potentially weather short-term market fluctuations and benefit from the long-term growth potential of automation. Regular monitoring and rebalancing. Regularly monitor the performance of FBOT and rebalance your portfolio as needed to maintain your desired asset allocation and risk profile. Question 11. Who is FBOT ETF suitable for? While the suitability of FBOT ultimately depends on individual circumstances, the ETF might be a potential fit for investors with the following characteristics. Investment goals. Seek long-term growth potential. Investors seeking to potentially benefit from the long-term growth prospects of automation technologies and disruptive innovation. Open to higher risk for potential reward. Investors comfortable with a moderate to aggressive risk tolerance and understand the inherent volatility associated with an actively managed sector-specific ETF. Seeking diversification. Investors seeking to diversify their portfolio beyond traditional asset classes and potentially mitigate risks associated with specific sectors. Investment horizon. Long-term investment horizon. FBOT is suitable for investors with a long-term investment horizon, 5 to 10 years or more, to potentially weather short-term market fluctuations and benefit from the long-term potential of the automation sector. Risk tolerance. Moderate to aggressive risk tolerance. Investors comfortable with the potential for significant capital appreciation alongside the inherent risks of market volatility, technology dependence, and active management. Investment preferences. Alignment with broader trends. Investors seeking exposure to disruptive trends like AI, robotics, and automation, which are expected to have a significant impact across various industries. ESG considerations. While not the sole focus, FBOT's integration of ESG factors might appeal to investors who prioritize responsible investing alongside financial returns. However, FBOT might not be suitable for conservative investors, those seeking capital preservation and minimizing risk, as the inherent volatility and sector concentration of FBOT expose them to risks exceeding their risk tolerance. Investors with short-term investment horizons, as short-term market fluctuations can be amplified within the automation sector, FBOT might not be suitable for those seeking immediate returns. Investors requiring high liquidity. While traded on a major exchange, FBOT's trading volume might be lower compared to established ETFs, potentially leading to liquidity risk. Question 12. What are the key considerations for evaluating FBOT ETF? Here are some key considerations for evaluating the FBOT ETF before you invest. Investment thesis and portfolio focus here. Alignment with your investment goals. Analyze how well FBOT's focus on automation and disruptive technologies aligns with your long-term investment goals and growth aspirations. Understanding the automation sector. Research the current state and future prospects of the automation sector, including its potential growth trajectory and any emerging challenges. Performance and risk here. Historical performance. While past performance isn't a guarantee of future results, analyze FBOT's historical returns and compare them to relevant benchmarks to understand its risk-reward profile. Risk factors. Carefully assess the potential risks associated with FBOT, including market volatility, technology dependence, active management risk, sector concentration, and emerging markets exposure. Fees and expenses here. Expense ratio. Compare the expense ratio of FBOT, 0.5%, to other actively managed ETFs and passively managed automation-focused ETFs to evaluate its cost-effectiveness. Total cost of ownership. Consider all associated costs, including expense ratios, trading commissions, and potential tax implications. Portfolio construction and management here. Investment strategy. Understand the process by which the portfolio managers select companies and how their approach aligns with your investment philosophy. Portfolio holdings. While specific holdings can change, analyze the types of companies typically found in the FBOT ETF to assess their industry diversification and overall risk profile. Management team. Research the experience and track record of the portfolio managers responsible for selecting and overseeing the holdings within FBOT. Alternatives and diversification. Comparison to other automation ETFs. Explore alternative ETFs offering exposure to automation, comparing their investment strategies, fees, and historical performance to FBOT. Portfolio diversification. Consider how FBOT would fit within your overall portfolio allocation, ensuring it complements your existing holdings and maintains a balanced risk profile. Additional considerations here. ESG integration. If ESG factors are important to you, evaluate how FBOT incorporates them into the investment selection process and the potential impact on returns. Liquidity. While traded on a major exchange, FBOT's trading volume might be lower than established ETFs. Consider the potential impact on liquidity, especially if you require quick buying or selling of shares. Question 13. How can investors incorporate FBOT ETF into their investment portfolio? Here are some considerations for incorporating the FBOT ETF into your investment portfolio. 1. Define your investment goals and risk tolerance. Investment goals. Clearly define your long-term investment goals. Are you seeking high growth potential, capital preservation, or a balance of both? Risk tolerance. Assess your comfort level with potential losses. FBOT carries inherent risks due to its focus on a specific sector and active management. 2. Analyze your existing portfolio allocation. Asset allocation. Review your current portfolio's asset allocation, stocks, bonds, cash, etc., and risk profile. Diversification. Consider how FBOT can contribute to diversification by adding exposure to the automation sector without significantly increasing overall portfolio risk. 3. Determine the appropriate allocation for FBOT. Investment horizon. FBOT is suitable for long-term investors, 5-10 plus years, who can potentially weather short-term market fluctuations. Portfolio size and risk tolerance. Allocate a limited portion of your portfolio to FBOT based on your overall portfolio size and risk tolerance. A smaller allocation is generally recommended for conservative investors. 4. Consider alternative investment options. Compare FBOT to other automation ETFs. Explore alternative options with different fees, investment strategies, and risk profiles to find the best fit for your goals. Diversify within the automation sector. Consider investing in a basket of automation-related companies or other ETFs to spread risk and capture different aspects of the sector's growth. 5. Monitor and rebalance your portfolio. Market fluctuations. Regularly monitor FBOT's performance and the overall market conditions. Maintain desired allocation. Rebalance your portfolio as needed to maintain your desired asset allocation and risk profile, potentially adjusting the weight of FBOT within your portfolio. Question 14. How does FBOT ETF compare to other thematic ETFs? Here's a breakdown of the key differences here. Investment thesis. While all ETFs offer exposure to automation and related technologies, their specific focus varies. FBOT takes a broader approach across industries, whereas others like ARKQ focus on specific areas like autonomous vehicles. Management style. FBOT is actively managed, allowing for selective company choices, while others are actively managed with different selection strategies, or passively track an index. Expense ratio. FBOT boasts a relatively lower expense ratio compared to some actively managed peers. Number of holdings. FBOT holds fewer companies than some alternatives, potentially leading to less diversification, but potentially allowing for more concentrated exposure to high-conviction holdings. Sector concentration. FBOT offers broader sector diversification compared to some alternatives like Robot, which focuses heavily on technology and industrials. Geographic exposure. FBOT offers global exposure, while BOTZ excludes emerging markets. ESG focus. FBOT partially integrates ESG considerations into its selection process, which might appeal to some investors. Choosing the right thematic ETF depends on your specific investment goals. Broader exposure to automation, FBOT, or BOTZ might be suitable if you seek exposure across various industries impacted by automation. Specific focus on autonomous vehicles or robotics, ARKQ, or Robot might be more aligned if you have a specific interest in these areas. Cost effectiveness. FBOT's lower expense ratio might be attractive if cost is a major consideration. Active management versus passive management. Consider if you prefer actively managed selection, FBOT, ARKQ, Robot, or a passively managed approach based on an index, BOTZ. ESG considerations. If ESG factors are important, FBOT might be a better fit compared to alternatives with no specific ESG focus. Question 15. How does FBOT's active management approach differ from passively managed automation ETFs? The primary difference between FBOT's actively managed approach and passively managed automation ETFs lies in how the underlying holdings are selected and weighted within the portfolio. Actively managed approach, FBOT. Portfolio managers. A team of experienced professionals actively researches, selects, and monitors individual companies. Investment decisions. Based on their analysis, they choose companies believed to benefit from the disruptive trends of automation, considering factors like leadership in automation, strong position in developing, implementing, or utilizing automation technologies. Financial strength, sound financial health, profitability, growth potential, and a strong balance sheet. Sustainable competitive advantage, durable edge in the automation space for long-term success. ESG considerations, partial integration of environmental, social, and governance factors into the selection process. Portfolio construction. Managers strategically allocate capital across chosen companies based on their conviction in their growth prospects, not solely based on market capitalization. Potential benefits. Flexibility and selectivity. Managers can adapt to changing market conditions and identify emerging opportunities. Potential for outperformance. By selecting high-conviction companies, they aim to achieve returns exceeding the broader market, or a benchmark. Potential drawbacks. Higher fees. Actively managed funds typically have higher expense ratios compared to passively managed options. Manager risk. The fund's performance relies on the decision-making capabilities of the portfolio managers, and their selections may not always yield positive results. Passively managed automation ETFs, e.g., BOTZ. Index tracking. These ETFs track a predefined index of companies related to automation and robotics. Holding selection. The index provider defines the specific companies and their weightings within the index based on objective criteria like market capitalization or specific industry classifications. Portfolio construction. The ETF automatically replicates the holdings and weightings of the underlying index. Potential benefits. Lower fees. Passively managed options generally have lower expense ratios compared to actively managed funds. Market exposure. They offer diversified exposure to the automation sector, as defined by the underlying index. Potential drawbacks. Limited flexibility. The ETF passively follows the index, and managers cannot actively adjust holdings or weightings based on individual company analysis. Market performance. The fund's performance is directly tied to the underlying index, and may not outperform the broader market, or achieve superior returns compared to actively managed options. Choosing between an actively managed and passively managed automation ETF depends on your investment goals and preferences. Actively managed. Suitable for investors seeking the potential for outperformance and flexibility in the portfolio construction, even though it comes with higher fees and manager risk. Passively managed. Preferred by those seeking lower costs, diversified exposure, and a hands-off approach aligned with the performance of the underlying index, even though it might limit the potential for exceeding market returns. Question 16. How does FBOT fit within a broader portfolio allocation for a professional investor? FBOT's suitability within a professional investor's portfolio allocation hinges on several factors, including their investment strategy and risk tolerance. Growth-oriented strategy. FBOT aligns well with a growth-oriented investment strategy seeking long-term capital appreciation from the disruptive potential of automation technologies. Moderate to aggressive risk tolerance. The ETF's inherent volatility, sector concentration, and active management risk necessitate a moderate to aggressive risk tolerance. Portfolio diversification. Limited allocation. FBOT should represent a limited portion of the overall portfolio, typically less than 5%, to mitigate the risks associated with a single sector and active management. Complement existing holdings. FBOT should complement existing holdings, ideally diversifying across asset classes and sectors to achieve a well-balanced risk profile. Investment horizon. Long-term investment horizon. FBOT's potential benefits are likely to unfold over the long term, 5-10+ years, allowing professional investors to potentially weather short-term market fluctuations. Additional considerations. Alternative investments. Professional investors might consider alternative investments offering exposure to automation, such as venture capital or private equity funds, for potentially higher growth potential, but with increased illiquidity and risk. Active management expertise. Professional investors with expertise in actively managing portfolios might have the necessary resources to analyze and potentially outperform passively managed automation ETFs. Here are some potential scenarios where FBOT might fit within a professional investor's portfolio. Satellite portfolio allocation. A small allocation within a satellite portfolio dedicated to high-growth, thematic investment strategies. Tactical asset allocation. A temporary allocation within a tactical asset allocation strategy to capitalize on specific market conditions or perceived opportunities in the automation sector. Client portfolio with specific investment goals. As a part of a client portfolio with specific investment goals aligned with FBOT's risk-reward profile and growth potential, considering the client's overall risk tolerance and portfolio allocation. That wraps up our exploration of the FBOT ETF. Remember, this isn't financial advice, and you should always do your own research before investing. If you're interested in learning more about FBOT or other automation ETFs, check out the links in the description below. We also encourage you to leave a comment and share your thoughts on the future of automation and its potential impact on the investment landscape. Thanks for joining us on Chat ETF today. Don't forget to like this video, subscribe to the channel for more insights into the world of ETFs, and hit that notification bell to stay updated on our latest content.